Beautiful, and welcome everyone to another Port Jackson Securities webinar. As always, my name is Lachlan Callaghan, Investment Manager for Fortum Wealth. This is not financial advice, this is just a bit of a presentation with Credit Intelligence. We're joined by Chairman and CEO Jimmie Wong. Thank you, Jimmie, for joining us. We've also got a few of the non-executive directors today as well as the Director of ChapterTwo with Michael Pixley, Russell Goodman and Chris Mushan. Thank you very much for joining us, and I understand we've got a brief little presentation, but I'll lead it off with Jimmie. Thank you for having us.
Okay, so I need to see the presentation before I can speak.
Can we share the screen?
Yeah, share the screen if possible. Okay. So welcome everyone joining this webinar. I'm happy to speak to all of you. I'm in Hong Kong, and I'm the Chairman and CEO of CI1. I have 3 colleagues in Australia speaking with me today. All of them are in Australia, one in Sydney, Chris in Sydney, ChapterTwo, and 2 NED, Russell in Melbourne, and Michael in Perth. So we try to speak on behalf of CI1 so that we can give more chances for the CI1 shareholders or some loan shareholders. They may be potential investors in CI1 so that they can learn more about CI1, the past and the future. Thank you. So for the annual report, I can refresh the memory of the business result of CI1 in the last 12 months. So can I see the presentation for the AGM?
Yeah, I should have. You should be able to share your screen now, Mr. Wong. If you want to share your screen, if not, I'll just get that AGM.
I cannot see the
Could
presentation.
You do that, Lachlan? Would you be able to put that up on the shared screen? Is that possible?
Yeah, I'll just get that up for you.
Yes.
Great, thank you.
If you want to start talking about it.
Jimmie, while he's doing that, why don't you give us the performance figures?
I think it's better that everybody can see the presentation on the screen so that we can be on the same page when I speak. Sorry for the delay. So someone is trying to share the annual report.
Beautiful. Yep, I should be able to see it now.
Okay, right. I think this is the one. Okay, thank you.
Next page, Lachlan.
Of course.
So try to can you enlarge the screen so that everybody can see more clearly?
That should be it. That's as big as it goes. Sorry.
Okay.
So so it's a bit small for me, unfortunately, and we can see our all faces, but the presentation is a bit small.
If you want to just start going through it, that'll be awesome. Thank you.
Okay, I try my best to read from the screen because the screen is a bit small. So in 2021, we have big progress in the business of CI1, and maybe there's some voice may be muted better to avoid any noise. Okay, so we have done 3 acquisitions. One is a ChapterTwo, which is an Australian debt restructuring company. Yoso is an Australian company also. Both of them are based in Sydney. Yoso is a SME buy pay later company and a SME lending company and a SME loan broker company. And One Step is a Hong Kong company who is in the focus of SME corporate service, and they are working in the direction of SME buy now pay later in Hong Kong. So for the financial position, I think CI1 have a good performance in the last financial year, and I think we have improved in the asset and liabilities position, okay, of CI1. And our revenue remains more or less the same despite the COVID-19 lockdown in many countries. I think this is a good result from my eyes, okay, as the chairman of CI1. So we can go to the next page if possible. So I think we have a big expansion in CI1 in the last 3 years since our backdoor listing in 2018 in Australia. We have 7 businesses in CI1 now, 2 of them in Singapore, which is the lending company. In Singapore, one is for the personal lending, one is for the SME lending. I apologize. Someone may have to mute the noise. Okay, very noisy noise. I heard. Okay, I think someone may better try to mute. Okay, it's better now. Okay, so we have 2 companies in Australia. One is ChapterTwo, one is Joso, which I have just mentioned. Maybe Chris will explain a lot more about the ChapterTwo debt restructuring business in Australia. In Hong Kong, we have 3 businesses. One is the long-standing debt management company in Hong Kong, which was founded by me in Hong Kong in 2002. We acted for all the banks in the personal debt management. Now it's in the bankruptcy administration, where I think the leading player in Hong Kong, good revenue in the past several years and good profit in the Hong Kong debt management business. We have low loan or low liability in this business. We are having 25 staff running this business. We get the business from the banks, no need for advertising, no need to worry for business in the next 4 years, because each case for the bankruptcy administration will last for 4 years. So we have plenty of revenue coming in this personal debt management business in Hong Kong. Another 2 businesses in Hong Kong are the buy now pay later. One is the UK Buy we just launched in Hong Kong in October the 1st, which is a personal buy now pay later, and we saw this is a big growth potential story in Hong Kong, and we will try to expand to Asia later, as buy now pay later is still a hot business, and we saw the big demand in Hong Kong in Asia for the personal buy now pay later, and it may be added together to our SME buy now pay later company in Hong Kong, which is called the One Flexi, and we have 20,000 potential SME clients in our One Flexi business platform. So we are trying very hard and very fast to expand this buy now pay later to these 20,000 merchants or SME in the One Flexi database, and it will have a close synergy with the personal buy now pay later UK Buy platform we are building now in Hong Kong. So this is the main description of the 7 businesses of CI1 in Hong Kong, Australia, and Singapore. So the presentation, I think I can speak more later with the real progress. So we will try to have a green buy now pay later if possible in Hong Kong and Australia, in other countries. So we are working in the direction of the green buy now pay later, about the green product or green services or the energy saving business. So working in this direction, and we will try to have more disclosure later when we have real progress or we have good news to tell the public. Go to next page. For acquisition, for the ChapterTwo, I think this is a very exciting business in Australia for ChapterTwo, and we have worked with Chris for nearly about more than 1 year, nearly 2 years, to build up the exciting personal app management platform in Australia. So for this part, I will invite Chris of ChapterTwo, the founder and the managing director of ChapterTwo, to tell us more about the detail and the exciting story ahead of us. Chris, please.
Thank you, Jimmie. So a bit of background. My name's Chris Mushan. I'm the founder and director of ChapterTwo here in Sydney, Australia. ChapterTwo was set up in July of 2015. We saw a need for an alternative solution to typical bankruptcy and Part 9 insolvency agreements for Australian consumers. We feel that the industry was flooded with some big players who were pushing consumers into personal insolvency agreements and bankruptcy when there are alternatives out there. So in a nutshell, ChapterTwo deals directly with banks and financial service providers or credit providers in Australia. We negotiate directly with those credit providers to assist our clients mutually between the banks and themselves. We have a mortgage division that's set up predominantly to help those customers in Australia who find it difficult to acquire finance given excessive debts or defaults on their credit rating. Seems to be a growing industry, and you can see with the likes of Pepper Money listing on the ASX and other players that there is more and more of a need for this alternative lending given that the banks are tightening up. And our other division, which is our main predominant division at ChapterTwo, which is our debt management. So since the acquisition by CI1 in 2020, we've been working with CI1 directly on how to improve our fintech and technology in order to best and better serve Australian consumers. If you follow CI1, you'd be aware that they do have a technology in Hong Kong, which allows them to disperse dividends out to banks. And that is what we've built here in Australia. Something that doesn't exist and is very exciting for us, given that the mobile app that we've built allows us to manage our client funds for a 5-year period. So it's taken from when our tenure with our clients prior to the app was about 12 months. We would be engaged, we'd assist them with their debts, and then the onus would be back on them to manage those repayments. The app now allows our clients to have all of their debts listed in one place. They make one manageable payment to ChapterTwo each month, which is dispersed out to the creditors and updates their portal and mobile app. So I guess what's very exciting is that given the rise of buy now, pay later and other financial service companies providing a lot more credit in Australia, there's more and more people taking on debt. Buy now, pay later is not credit checked in Australia, so many of the clients we see come in with 5 or 6 of them on top of their credit cards and mortgages, and by the end of the month, they don't have the ability to make the repayments, or they miss direct debits given the amount of outgoings that they've got. So we're simplifying that process for consumers by managing their funds for them, ensuring that the interest is frozen on these debts, and setting out a plan that allows them to become debt-free in 5 years. What that will allow us also to do throughout that period, given that we can review and manage their credit score through the app, is be able to offer them other products as their credit improves and as their debts are reduced. So offer them the ability to buy their first home or refinance their mortgage, or refer them to financial planners to offer other services. I guess it's also exciting, given that it's under the CI1 banner, that CI1 has a focus on buy now, pay later, and ChapterTwo in Australia is more of a hedge play regarding that. Buy now, pay later is a hot topic in Australia, but it is from the outside as the share prices continue to increase. But from where we see it, it's affecting a lot of the consumers, given how easy it is to access credit. Although they might be up to $5,000 loans, if you get 5 or 6 of them, it starts to become a problem. And these debts are meant to be paid back within 4 weeks. Well, that puts a lot of pressure on someone's mortgage and other credit cards. So we're finding it exciting, growing this business and helping Australian consumers. We since July we've been alerting the Australian consumers to our new services, and since then we've seen a massive uptick in the amount of clients that we're bringing on board and the amount of inquiries that we're seeing through our website, which is very exciting. So we think that we're onto something great here.
We have a question here from Justin. He's asking about the default rate. Obviously, we've seen JobKeeper and other such policies come through, be a nice help for incomes, but has been the default rate on the sort of service that you provide?
So it was interesting during COVID, the major banks, they obviously gave a lot of COVID relief. This is into essentially a hardship program. The banks generally only offer that for about 6 months. So towards the end of last year and the beginning of this year, we saw a lot of those COVID relief programs end and our business really picked up. Then we go into lockdown phase 2, and the banks again stop that collection process of activity. So it's really started to catch up on the consumers now. They have had and been able to take advantage of 2 lockdowns and 2 hardship programs that the banks were offering. But now we're seeing the banks really up their collection process, and they're starting to sell big debt books again. So yeah, we are seeing a lot of our clients come in on the verge of defaulting, but given that our services is informal and it doesn't default your credit file, most of the people that come and inquire to Chapter 2 are before that default process. So they can see on the horizon that it's starting to get tight and that they need assistance. So if they come in at the right time and they go through our service before being defaulted, they won't see a default on their credit file.
Excellent. Okay, excellent. Well, we might go through a few questions that some of my investors have been asking in regards it, and a few of the other things are obviously you told us a bit about buy now, pay later sort of sector, particularly the acquisition of Yozo Finance and One Step. What's the next steps in this sort of sector as a whole?
Yeah, I think you're on
Jimmie, you're on mute, Jimmie.
Can you hear me?
Yep.
We can.
So the question is for me to answer, am I correct?
Yep.
So can you repeat
the question? The question, Jimmie, is what are we looking to do with our platform for Yozo? And I think really we're talking about our solar energy play and how we're going to extend that into credit and buy now, pay later.
So Yozo is a SME loan company, and buy now, pay later is a part of the strategy we are going to explore in the coming years. And green product and green service, including the solar panel, there's a heavy demand in the market. And when people can't afford, okay, whether they are merchants or the business owners or individuals or homeowners, they may require some sort of a financial product. And buy now, pay later may be one of the potential options we can offer, okay, to our customers. We are doing the same direction for planning in Hong Kong also. There's also a huge market for green services and green products. So I think CI1 will focus more in future for the green sector, for the buy now, pay later, okay, financial services. And it will be part of our expansion plan, not just competing with the traditional buy now, pay later company in Asia and Hong Kong and Australia. We'll try to do something unique if possible.
Beautiful, beautiful. And just on the Asian market, obviously here in Australia, buy now, pay later has been a major expansion. We've seen Afterpay, we've seen uptake of Zip. I know those are the sort of sectors that have been absolutely increasing at a rapid rate. How has merchants as well been taking up buy now, pay later in Asia? How's that sort of market been going?
I think we will try to start in Hong Kong first, okay, with good partners, and we are looking, we're talking to the big funders. Okay, so once we have the good funding support, I think we can expand very quickly in Hong Kong and Asia, and we got a lot of good response from the potential investors because everybody know what is buy now pay later. It's a proven success, and there's still a lot of room for expansion in Hong Kong and Asia. Unlike Australia and other European countries, which are buy now pay later has been working for many years already. And I see Hong Kong is beautiful market for buy now pay later because we foresee the bad rate will be much under good control. As I'm expert in the personal market for nearly 20 years, I've experienced lawyer in Hong Kong, and I have a good friends and business partner who are experienced a debt collector in Hong Kong. And we agree, Hong Kong people will not default and run away with just a small amount of buy now pay later financial loan we can offer to them. In fact, the buyer do not pay the interest. The merchant pay the fees as interest, and the buyer can buy the goods, okay, for free, and they will pay in 2 months in Hong Kong. We foresee the risk of a bad debt will be much lower than other countries, okay, and so it's a beautiful place for Hong Kong to do the buy now pay later in this market in the coming years, because no one is doing big and no one is doing successfully for the time being. But the spending, okay, the volume in Hong Kong on the online shopping, the restaurant and the service sector, and also the in-store purchase. Hong Kong is a small place, but it's very busy, and the consumption power is very high, and the income is not bad as compared to other most advanced cities. So we see Hong Kong will be a good space for us to expand very quickly in the buy now pay later market, whether personal or SME. For the Asia, I think we will have a good chance to expand because we see Asia has a huge population. Asia will be the future growth engine in the world in the coming decades. Okay, I think everybody agree. But provided we can see, okay, the income of the Asian countries, many people, they have a low income as compared to Australia and Hong Kong. But it doesn't mean they don't have the power, okay, to spend. Okay, the lower the income, we can offer a proportion of their monthly income as a buy now pay later, okay, a limit, and provided we can provide good service and good products, and we can give them a good financial support to buy their necessity or even the clothing, okay, or other service that they need the cash flow to support their spending, and then buy now pay later can be a good okay offer to them, provided we can control good risk, okay, to people. We do not overlend. We do not overlend to people. Okay, so I think Hong Kong and Asia will be a big expansion plan for CI1 in our buy now pay later market expansion proposal.
So in saying that, as you say, good product and good services, what's going to be driving your company for the years to come? What is in the works for the next 12 months? What do investors have to look forward to? What is going to be the driving force? Because at the moment, a lot of clients and a lot of other investors I talk to say this is a gold mine, a cash cow that's waiting to happen, but the share price just hasn't been reflecting it. What do the investors have to look forward to? So
I would say that a good company must have good story for growth and good fundamentals. Okay, CI1 have good fundamentals. Okay, everyone can see from our last 3 years annual report, we have good income, good asset and liability, improving asset liability. We have a business expansion. We invest the money to buy a company with good growth potential. I think we should always learn from Warren Buffett. Okay, investors should have a good attitude to invest in stocks. Okay, I would support the idea of value investment. Okay, we don't look for short-term fluctuation in share price. Okay, we look for the long-term fundamentals of a good company. Okay, the share price can be controlled or can be affected by a lot of factors. Okay, in the financial market, but in the long run, after 2 years, 3 years, 5 years, or in 10 years, the fundamental of the company will be the only indicator, okay, of how a successful company. Someone buy the shares, okay, today, the share price can go up 10 times, can shoot up 10 times. Like the share price in CI1, okay, shoot up in February early this year. It's not healthy. Okay, that shut up is not connected to anybody in CI1. Okay, we don't know what happened. We don't know who are they. Okay, in fact, we have complained, okay, to ASX in May 21, okay, about the abnormal, okay, price movement, and the we are suspicious of some illegal price manipulation. We complained to ASX. Okay, so the share price is not controlled by the CI1 management team and the board. We don't want to see a unhealthy up and down, okay, which is not reflecting the fundamental and the growth of CI1. Michael and Russell, anything to add about this?
Yeah, we look. Unfortunately, we are a multifaceted business throughout Australasia. We're in the debt management business, and that business is 20 years old and growing, and that's Jimmie's business. Chris's business, 2015, it's 7 or 8 years old and growing very rapidly. And yes, some of the business, the newer businesses, are in the buy now, pay later space. And unfortunately, in the fervour of January, February, March, and April, when everyone was looking for the next Afterpay or Zip or Pepper Money, they'd get on and look at our fundamentals and see that, yes, these are older businesses and new businesses all growing. And, you know, we welcome the attention, but we didn't welcome the piling in on the share price. It just upset the share price. It went well beyond fair value, and now it's come down. It's probably now below fair value. All the time, we as management are working along on our various platforms in the various countries and growing all of the businesses. So as Jimmie said, with Warren Buffett says that the stock market in the short term is a casino, and in the long term is a weighing scale. The true value of the company will always come up in the long term, and that's what we're betting on.
I think the other thing with that is a number of other companies were having the same increases in prices, then falling out of bed, which is really very unhealthy. And I think you basically saw one specific company, Credit Suisse, who was a shareholder for a day and then sold out. And that's a lot of overseas prime hedge funds. And when they come in, it's not healthy because you get a lot of people when the share price goes up, and a lot of people get caught at high levels, and that results in a sort of a downdraft, which takes ages to actually work through the system, and for people to be able to get out of positions which they only wanted to be in for a short term. So we much prefer seeing things go up slowly, much slowly, but not like up and then wait back down. That's very unhealthy.
Yep.
And for me, what we are working is not affected by the share price. We keep on working hard and smart every day. We keep growing the company. We want to get the good financial, growth of the company, in a healthy manner. We try to make profit, for all our business. For buy now pay later, it's a short, it's a big investment, but it needs time to build up. In fact, we did not spend, huge amount of money to build our buy now pay later business. We try to move slowly in a careful manner, and we get the right big funding support to support. We can have a rocket rise in our buy now pay later business. In a short period of time. And as I mentioned before, there's a huge market potential. It's an untapped market in Asia and Hong Kong. So once CI1 is successful in doing this buy now pay later, business venture as a leader in this Asian and Hong Kong buy now pay later market, and I think CI1 will get a fantastic performance in the coming years.
Beautiful, beautiful. Well, we might go to the audience just for the next couple of minutes. If audience members, as I said in the chat at the start, if you've got questions, just send them through. We do have one from Daniel. Daniel's sent through, given the low share price at the moment, will the company consider a share buyback in the near future? In regards to that, I think the company just has to be careful of what they say at the moment, but over to you, Jimmie. What are your thoughts?
I think share buyback is one possible option to CI1 board of directors to consider, but I think there's a pros and cons. So we need to consider carefully whether it's a good move, for us to do. I think It may be helpful to our share price, but it may not be the only way we can have a good performance in our share price. Okay, so what is the view of Michael and Russell about this?
I think one of the things with the share buybacks, companies only should really do them when they haven't got a better use for their own capital. But given the opportunities that we have, you basically should use the capital on more productive things rather than buying back shares. And there's also been a lot of studies done about share buybacks and the impact that they have on share prices in the medium term. And it basically shows that share buybacks have very negligible impact on the share price moving sort of 6-12 months out from when you did it. So there are too many opportunities elsewhere, I think.
Michael?
I endorse that 100%. I mean, if we had no better use for our money, that would be conceivable, but we actually are growing 2 or 3 very profitable businesses right now, and we should concentrate our financial resources and our management resources on growing ChapterTwo, growing Yozo, and growing BNPL in Hong Kong. That's where, and of course, one thing we've all forgot to mention really is that we have very good lending platforms, which are old school in Singapore, which is a very strong credit market. And we're looking at extending the ChapterTwo app solutions and the buy now, pay later out of Hong Kong into Singapore. So that's really what we're spending our money and time on at the moment. Probably not.
So yeah, my personal view is CI1 price now is undervalued for many months. Okay, so whether undervalued or not, I think there may be a lot of views, but people can study our annual report and our recent announcement. They can have a good analysis. Okay, what is the fair share value of CI1 now with our big expansion story? Many big companies, they have good profit, much bigger than CI1, but they have no growth explosion opportunities. Okay, so their value is PE, based on PE 8 times or 10, even the big banks and the big banking company. Okay, they have big profit, but they don't have a good potential for big growth in future. So people investing CI1 shares, I hope they will look at the future expansion plans of CI1. Don't look at the recent profit or revenue. Okay, we are still a more small company, I must admit, but we have a bigger room to explode. Okay, in our growth in the coming years. That's why I make 6 acquisitions in the last 3 years as chairman and CEO and founder of CI1 after listing in ASX. Otherwise, I just sit there and working on the profitable business model in Hong Kong. It's good enough. No need to expand, no need to invest. So this is the beauty of going this is to raise funds, to expand, and bring the biggest return to the shareholders. That is my view. And we may have a new report, coming in the market, and if this report is released, I think the investor or the new or the potential investor can look at the new valuation report if it is released. Okay, in a report from time to time. We have a valuation report prepared by Pixley from time to time. Okay, if there's a new market released in the market by Pixley, then investor can have a look at the contents of the Pixley report about the latest valuation of CI1. Michael, anything to add? Michael and Russell, anything to add?
No, I don't think so. I think, a report when it comes out, I think the market will be very interested to hear. There hasn't been any broker pushing the stock or covering the stock for a long time, and that's been one of the reasons why the stock is where it is. But a new research report should be out within the next week or 2, and I think it looks fairly positive in terms of the valuation.
Well,
I agree. And the fact that the results in the 2021 results are great platform results showing growth on all aspects of the business, and we're just getting on with managing that growth.
I think the other thing is that it's really important that people actually look at the counter-cyclical nature of the business and how well it can do if the stock market and property market go through the floor, which they are going to do in the next year at some stage, and CI1 can do really nicely as a result of that. So it doesn't sound nice, but it's very few companies are hedged to the market, and I think we are.
Yeah, well, this was going to be, I believe, probably our last question, because there's a few other questions just with regards to share price, but I think we've already been over that.
Yes.
This is from Angela. It's directed towards Chris. It's asking, how has the property market affected how your business has been performing, and what's the plans if the market does come back?
Sorry, can you repeat that? It just broke up a little bit.
So how has the property market affected your part of the business, and what's the plans if the market does come a little bit back?
So given refinancing is so cheap at the moment, it's definitely affected our clients in a positive way. A couple of years ago, we'd get clients that come in with a couple $100,000 worth of debt, and looking at refinance options were an absolute no. Given that a lot of our clients' properties have gone up by exorbitant amounts, it has given a lot of our customers the ability to refinance, which is great. It's probably our biggest revenue maker, given that we couple debt management with refinancing. If it comes back a bit, we've got the option of the long-term payment arrangements. So we only put people into refinance solutions if they have the ability to. If not, then they go into our 5-year payment plan. So it's a bonus if they can, and if they can't, we have a solution regardless.
Okay, excellent. Well, if that's pretty much all the questions for today, I think we might wrap it up. I think we might have a final comment from Jimmie. I think Jimmie would like to say one final comment just on how the future looks for credit intelligence. But from our side at Port Jackson Securities, I'd like to thank everyone today for turning up. And once again, we'll send through some details and recordings with regards to that, and we'll get in touch with a bit of feedback. But I'd like to thank all the panel members today for turning up. Jimmie, do you have any final comments? Sorry, I think just your mic, Jimmie.
Can you hear me? Can you hear me now?
Yep.
Okay, I would like to thank everybody joining this, including my colleagues from CI1. And I'm very confident in the future of CI1 as we have good fundamentals, good stories, good foundation laid out in the past 3 years. So we just keep on the hard work, and we will try to bring the biggest return to shareholders. Okay, I hope shareholders investing in CI1 will have a good return in the coming years. That's my wish. And this is my goal to work for CI1 in the coming years.
Beautiful.
Okay,
well,
thank you everybody for joining today.
Everyone for turning up today. Thank you, Chris. Thank you, Russell. Thank you, Jimmie, and thank you, Michael. This has been another Port Jackson Securities webinar, and we look forward to seeing you in the next one. Catch you later. See you soon. Bye.
Okay, thank you. Bye-bye, everybody. Take care. Bye-bye. Bye-bye.